Author of many books, Fraser, thanks for joining us today. Happy holidays to you. I must ask you, many are caught between hard landing, soft landing. Mobius just told us he sees no landing. He's forecasting growth of 7%, but sees strong growth going ahead for China. No problem at all. Credit bubble, don't worry about it. Property bubble, don't worry about it. Do you agree with him?
I don't see how you can take that view, simply because for the past decade China's been growing at double digits. So if you're now going to 7% as your new norm, which is certainly where we seem to be going to and potentially lower, then that's a fall of 30% of growth. So whether that's hard or soft, I know that 7% sounds great in a sort of European or an American context, but in the Chinese context, that's the lowest level you've seen pretty much since the Asian financial crisis. So there's certainly hard times ahead for China. I try and avoid hard or soft landing because I think the numbers are somewhat skewed anyway. If China's growth does go to sort of under 5%, it'll never come through in the official figures anyway.
Your other concern is definitely about more bad debts, more weakness, margin squeeze. You've got a European crisis, of course, a US debt issue, election looming as well, and emerging markets under pressure from the inflation, and of course the Eurozone. How do you advise your clients, Fraser, going into next year?
Well, I think you have to. We know that Europe is not going to solve its problems literally for the next decade. These are multi-year problems that Europe is already sort of within. You're looking at, let's say, sort of Thailand or Indonesia in 1998. If you want to look historically in comparison in Asia, that they've got many difficult years ahead with them in Europe. The moves that the politicians have done are simply not enough, and this will be many years to solve. So the global environment is going to be difficult for China. We know that in China that domestically that bad debts will certainly rise. You know, while people say they're not worried about them, I can say you certainly should be worried about them. They're definitely going to rise. There's lots of money being wasted in China. China's balance of payments is starting to move against it. So China's going to have a difficult time going forward. The next few years are going to be much tougher for China than the past sort of decade has been, without question. That said, when stocks have fallen 20 or 30%, you can certainly expect rallies again. So I would argue that almost nothing in China is investable, but almost everything's tradable. You could certainly expect some strong rallies in certain sectors. You've seen that already in the past quarter in the banks, although the banks have huge problems, and you're going to see it in other sectors as well. And certainly the market as a whole, I think, can rally quite strongly, but ultimately probably end up being flat on the year, just as the market's very volatile.
You just said banks have huge problems. Again, many, of course, concerned about a banking crisis of enormous size, bigger than Lehman, the US, and particularly for Europe again. But you said banks have problems in China. How about other problems?
Well, certainly we know there's sort of big problems out there. The local government financing vehicles are anywhere sort of $2 trillion US dollars of debts. Many of the projects are not going to be of any value. They've started to roll over some of those problems. Is that problem big enough that the government can't handle it? No, I would say it's not. The government still has the resources to do things, but it's going to be a weight on the banking system for a considerable number of years. When you think that the Asian financial crisis bad debts are still not fully cleaned up, and that was over a decade ago, you know that this problem is going to hang around for a while. So any sort of rally in the banks, I would have thought it's more a selling opportunity rather than this blue sky horizon. That said, I don't think we're going to see banks going to zero either, sort of in a Lehman Brothers or a Bank of America or Citibank. Equity shareholders are not being wiped out in the banks in the next year by any means either.
Final question for you. Going into next year, which asset class is the asset class of choice for the more defensive, obviously, investor?
Oh, that I don't necessarily need to make a decision on. That's not something I have to do at CLSA. But I would have still thought that gold is probably still a good investment when you look around the place. And I have to say I still quite like the Singapore dollar, but I'm somewhat biased because I sit in Singapore.
Thank you very much indeed, Fraser, for that. Have a great